All right, Bulls and Bears back with another dose of economic reality. BX4 News. The economic situation and the indicators that tell us what's happening here are deteriorating like never before. The consumer in the United States is backed up against the wall like never before. And we're going to get into some more numbers, data, and statistics here that I think are going to back up the fact that we're headed for some very, very difficult times economically. Now, that doesn't mean everyone. There's certain people that are positioned very well that'll do just fine in the upcoming economic downturn, if you will. It may be an upturn, not a downturn, but an upturn for many people, and hopefully most or all of us here on this channel. But let's get into the news, folks, because some things we really need to keep an eye on. We're going to first get into the news, financial, economic news, cost of living, inflation, price levels, all that, housing market, jobs data here coming up, a lot more. So please make sure you're tuned in and subscribed here. Let's go ahead and get started right here. Another egg recall, folks. So people cheering because egg prices went down. We've got a huge egg recall. And they're even talking about this over in the UK. It's so big. Out of the Independent, egg recall over Salmonella spans across 9 states, folks. And we got one location in particular. August Egg Company is recalling $1.7 million. Not million dollars, 1.7 million dozen. Wow. Multiply that by 12, and that's how many eggs it's going to be. 1.7 million dozen eggs. Free range. That's the most expensive kind, too. Free range brown eggs, folks. We're seeing costs are going to start going up again for this here. And this is across several different stores here. We've got Save, Mart, Food Max, Lucky, Smart and Final, Safeway, Raley's, Food for Less, and Ralph's, folks. So that's not good news for people looking for that lower grocery bill. And that's one of the biggest things that people are complaining about besides housing and rents and costs of homes in general is the food bill, folks. That's like the second biggest thing on people's budget for the most part is that food bill. Second to only, of course, the housing costs. So not good news. Be careful what you buy out there. And if you do buy it from one of those locations, maybe take those back and get your money back. And if you did buy them, well, hope you cooked them really well to hopefully kill what's ever in them. But bottom line is, folks, look for egg prices to stop their drop and probably start going back up. I mean, with the magnitude of that. But it depends on the state that you're in. Hopefully we'll see less of these things going forward where they have to, kill off entire farms of chickens and recall eggs and all this stuff here that's been happening. Moving on here, people, we've got this here out of study finds. Amid recession fears, Americans are completely changing how they handle money, and it's not what you'd expect. So we still have a lot of people out there still doing a lot of the things they've always done. We see stadiums packed with people shopping, but things are changing, and now people just have to continue to take on more debt to do these things. But what it's saying here out of this report is 77% of Americans have changed how they manage money due to this uncertainty. 49% are now prioritizing no surprise fees at the top of their concern when making purchases. 58% believe a recession is inevitable, driving demand for predictable, transparent financial products. So people are being more cautious now on their spending. Yeah, I don't know if I believe everything as far as some of these surveys put out, because we just saw recently, what did we just see? That more people than ever are doing buy now, pay later. We've got concerts now. Most people now putting in on a buy now, pay later plan because you go to buy a concert ticket through Ticketmaster and some of the big outlets, and they're going to ask you if you want to finance a concert for 6 months, folks. It's pretty crazy what's happening. It used to be just big items people would finance, cars, homes, of course. Then credit cards became the mainstream thing, for the last 20, 30 years. Then people started financing a lot of things, groceries, everything you can imagine on credit cards, and hopefully paying it off every month, but not so much now. Recently, fewer and fewer people are able to pay off their card in full each month. So you see debt climbing like never before. And then you saw a shift to where people were buying mattresses and financing it for 6 months, not just on a credit card, but buy now, pay later, finance it over 6 months. Big things, mattresses, furniture stores have done that, for many decades now. But now it's things like a trip to the grocery store, financing groceries for 6 months, buy now, pay later for the concert, buy now, pay later for your hotel trip, booking a vacation, right? All these small purchases or smaller purchases, now people have to finance them with buy now, pay later, folks. It's very, very crazy. They call that YOLO spending. You only live once, right? People are just going to buy it no matter what, even if they have to finance it with a specialized repayment plan. It's pretty crazy. And we see this way of continually kicking the can down the road with different financial products and fancy ways to get people to buy things. I mean, you could say it's fancy, you could say it's innovative. But anyway, that's what they do to keep the economy from imploding, folks. We also have things that are shifting, though, and changing very rapidly here. We had programs to help people over many years now, especially since 2020, programs to help people that couldn't make their payments. Now those programs are ending, especially when you look at like the loans right now, the student loans, specifically 10 plus million people already delinquent, and those numbers continue to climb. And if they don't re-implement some sort of pause on those payments, you're going to see a big part of the consumer drop out of the economy, because these people with their credit scores sinking and having to repay the student loans, combined with dinging their credit files, you're going to see a lot of economic activity drop because that drop off in those people that are now seeing the repercussions of this debt that they can't pay back. They cannot pay it back. All right, that's what I think is going to happen. I think we're going to see some major things unfold here in the coming months here, coming up through the summer. We also have inventory in the housing market beginning to climb. And we got a few other data stats and data to get into. But first, let's jump into the housing market. Let's look at that next here. And as we may remember, you may remember from the previous housing bust, which was all the way back to 2008, 9, and 10. Those were the years where prices started dropping. Then 2011, 12, 13, they started coming up again. And now for over 10 years, we've seen year-over-year price increases pretty much every year. But things are changing. I'm not saying there's going to be a crash, but things are changing. Take a look at some of the inventory increases in some of the cities here in California. And if you remember the last bust, California is kind of where it started, and then it started spreading across the rest of the country. But we've got Wolf Street out here giving us a few different numbers for inventory increases. Where I'm at here in San Diego, we're up 66% year over year. LA, 47%. Orange County up 79%. Wow. Riverside, San Bernardino up 51%. San Jose, Silicon Valley, 56%. San Francisco metro area, 40%. Finally, Sacramento, 55%. One more. Fresno, California, 42%. So things are changing, folks. And is this going to be the beginning of the housing downturn that so many people have been expecting, right? It's been a very wild 10 plus years with the housing market prices going up continually. And for a while, people were thinking that things were never even going to change. Well, things are changing. We're not seeing a crash yet. But will we see a crash, or will we see even a major correction before the end of the year, right? Please let me know what you think down in comments. Or will they just come in with new programs and ways to prevent prices from dropping? We know that the powers that be, they want high home prices. That's higher tax revenue, right? And of course, it makes the economy look better when home prices are climbing. More people can borrow against their home, take out home equity lines of credit. So will the powers that be just keep that market propped up, or is it too big to control? Will it crash or collapse? I think you know my thoughts on this. I think it can and will be completely propped up if that's what the powers that be want to happen. But remember, the powers that be also, they can make a lot of money if the markets drop. And if a bunch of people lose their homes, that's more homes that the big money, the billionaires, can come in and buy for even a lower price. So you have to think about that as well. And still on the topic of housing, we've got a combination of dropping rents also happening right now with increased evictions here. Look at this here, just out recently, just in the past few days. Eviction filings in Washington skyrocket. Housing advocates hope a new law will limit rent hikes. So they're going to try to come in with more rules and regulations to try to stop landlords from raising their rents. We've got the number of people being displaced right now is at historic high in the state of Washington. January 2025 was the single highest month that we've ever seen seasonally. February and March were just a hair under that. King County alone, eviction filings in January were 66% higher than pre-pandemic levels, folks. We told you this was going to happen. As soon as the programs ended that prevented people from getting removed from their home, we said we're going to see new records in evictions, and we're seeing that in a lot of states, not every state, but new records are being set every time I take a look at this news. So I think things will likely continue on this path unless they come out with some other program to keep people in their homes. Even if they limit rents and stop rent increases, it's not going to change the fact that so many people now can't afford rents as they are today. So when rents come down, that would be actually something that would help out. But just preventing rents from increasing or preventing them from being increased a certain amount, it's not going to fix the problem, folks. People can't afford the rents now. Rents going up more slowly, it's definitely not going to fix anything. I mean, please let me know what you think about that down in the comments, though. What I expect to happen continually this year is rents that are dropping, and they've been dropping now. We just saw the first year-over-year drop that we've seen in a very long time. We just seen that here this year, and I think that's going to accelerate. So now instead of just 1% year-over-year, as we look at the new year-over-year numbers as the months progress into this later into this year, and we're almost halfway through the year now, but as the months progress, I think we're going to see the year-over-year drops get bigger, and every month we look at it. So it's about 1% now. I think it's going to be probably between 4 and 5% decline by the end of the year. Not huge, but definitely maybe some good news for people that are looking for a lower cost of living. All right, speaking of the economy being propped up based on borrowed money, look at this. Revolving credit jumped in April as consumers loaded up on card debt. So, folks, it just continues. The whole debt game, balance transfers to a different card, buy now, pay later. It's not even counted on credit reports. I did hear, though, that was going to be reported. I'm not sure when that starts, but I did hear. I'll get that for you for the next report, because that can really change how this debt is handled. And how bad is it? Well, the annualized gain of credit card debt, the increase is now 4.3%, and that's the highest rate since going back to the beginning of this year, and it's now over $5 trillion, folks, in outstanding credit card balances. That's also the highest amount of credit outstanding since the end of last year, though it represents a slight decrease of 0.8% from April 2024. So sometimes you'll see the debt get paid down a little bit. Tax season, people get their tax returns, they'll pay some of it down. But for the most part, we're seeing steady increases in these credit card balances. All right, let's jump back into housing for a minute here, folks. Look what's happening up in San Francisco. That's problems with the teachers. Teachers have to commute so far in certain cities because they can't afford to live near the schools. Sometimes teachers are commuting 50, 100 miles back and forth every day to work. And with gas prices right now, especially in California, that's a big problem. So look what's happening up in San Francisco. We've got old parking lots now being transformed into affordable housing, or they're using these parking lots rather to build affordable housing. And in some cases, they're transforming like hotels into apartments and even commercial buildings into apartments. We've seen some of that. Specifically for teachers, this school district housing development takes unused land and repurposes it for much needed affordable housing. After nearly a decade of planning and consultation, San Francisco Unified School District made its first venture into the unexpected that's increasingly relevant. The business of affordable housing, that is a 135-unit housing complex in San Francisco, specifically for teachers and school staff, right? So pretty interesting that schools have to step in now and get into the real estate business just so they can have teachers that want to work at the school. That's how bad affordability here is in California. So are we going to see that in other states? I think they're going to have to, because a lot of other states are just unaffordable. You have, of course, the Rust Belt and the breadbasket, the middle part of America. That's still somewhat affordable, but still, if you look at prices 5 or 10 years ago, even places like Iowa, Indiana, prices in those states, Ohio, prices over there are now what they were in California just about 7 to 10 years ago. So pretty crazy when you think about that. And it's kind of mixed, right? We're seeing home prices correct in some areas, but others, they're increasing. In fact, if you look at 10 states here, home prices increased. In fact, just hit record highs in 10 places here. This is out of NASDAQ. Riverside, California, Washington, D.C., New York, Seattle, Boston, Honolulu, Hawaii, Oxnard, California, Los Angeles, San Jose, and Santa Maria. So even though rents are starting to come down and inventory is piling up, if you look at the year-over-year numbers, we're still up and setting new highs, all-time highs in some cities, right? So it's pretty crazy, but at the same time as record highs year-over-year, we're starting to see inventory pile up. So definitely something to keep an eye on and keep track of, because housing, again, is such a huge part of the economy. What housing does, the economy does, right? Over 7 million Americans are now unemployed. Now, that's the largest that we've seen since 2017, if you exclude 2020. And what they're saying here out of Market Watch, it's not going to get better soon. I think that's going to be correct. I think they're right about that. The number of jobless workers hit the highest level since the pandemic era. Excluding the pandemic era, which you can see on the chart right here, I'll zoom in a little bit. Excluding 2020, we're at the highest that we've seen since 2017. So we can see it's steadily climbing, and not much has gotten better since the new administration took over in January. Of course, there's people out there saying it just takes time, give it time. Folks, time is just going to make things worse, right? Because a lot of things are changing. Back to what we said at the beginning, the loans have to be repaid now. So big problems ahead for a lot of people, but not everybody, because if you're positioned well on this, you can make money off this. Look what's happened with a couple things here to touch on. Look what's happened with silver, folks. People know I've been talking about silver for several years now. Silver just jumped up, folks, and let's see where we're at as of today. I'll bring up a chart for you real quick here, folks. $36.13 as of the last market close, which was the 6th. And if we look at a 5-year chart, we see that silver's done pretty well. If you would have bought, back when we first started talking about it here, back in like the $14 range, $14, $15 when we first started talking about it, you would have more than doubled your money. So basically it's outperformed the stock market. It's outperformed housing and real estate. So not bad, right? Not as big of a run up as gold. Gold's a little bit harder to get into because that's been over $1,000 an ounce for a very, very long time. But silver is still something that even people with 20, 30 extra dollars at the end of the month, maybe at the end of the week, but at the end of the month, buy a few ounces of silver. Hopefully you're not paying for shipping, because if you're only buying a few ounces, you're probably going to end up paying for shipping. So go to your local coin dealer and you might be able to get it there. Not as cheap as you can get it online, but you don't have to pay the shipping cost. So that may be the better way to go for accumulating some silver. Stack that silver, folks. That's one thing I continue to do. That doesn't change as far as my investment program or plan here. But let me know what you think about any of this, folks. The inventory jumping up here in California. Are we going to see big things pop off in the housing market? Is 2025 going to be a nothing burger? Or are we going to see big things happen as we progress into the year? In a few weeks, we'll be halfway through the year. Crazy how time flies. Let me know about any of this, folks. Thanks for watching. As always, keep stacking. Bye for now. Peace.